Hello traders, and welcome to the weekend edition, the most important video of the entire week. This is Dez here at Grok Trade. This video is good through Sunday, October 28th, 2012. Let's hit the ground running. We did have a great GDP come out. Well, let me say this, better than expected GDP. We went from 1.3 last quarter up to 2.0, which was slightly above the 1.9% estimate. So with that, let's take a look at the markets here. Now, I redid a lot of my lines, support lines, trend lines. So I would highly recommend that you pay special attention to these lines and make your lines look like mine on your charting platform and follow along with the numbers that I have over here to the left. Make sure you click the bottom right hand corner to make this a full screen video so you can see it in very clear high definition, so you can see these numbers here on all these different charts that we're going to be looking at. Alright, this is the S&P daily. What you'll see here is we had a major trend line coming down. We have a rising wedge here. The rising wedge is now broken down. That's bad news. With that, we're chopping around, making a low base down here. Let's blow this up so we can see it. The last few days we've just been chopping around. Now this is the weakest 13th quarter of an expansion that we have seen since the end of World War II. And that quote is coming from David Rosenberg, which is the chief economist and strategist for Gluskin Sheff. So with that, this is a pretty nasty little quarter we've seen after such a nice rally we've had. And you can see this last few weeks, last couple months has just been pretty choppy and on the down skew for sure. Alright, with this, let's go to the NASDAQ and take a look here. NASDAQ, we're still within the confines of these two big chunky trend lines, and if I were to zoom back in time, you'll see this is a big major rising wedge. Let's zoom back in, and you'll see we are staying between these two main trend lines, these blue lines, and we're just heading down. But look where we found support, right at that major trend line. It's not by accident. We are above the 200-day moving average. Gang, if we go below this 29.79 and get a close below that, I would actually say we need to go lower than that. I would say we need to actually go lower than I would say we need to be at 26.61 or lower, 29.61 rather, or lower before the market's going to start really cracking down. Take a look at the Russells. Russells between the two averages. We are at the support line, but check this out. We are now below a major trend line. We are below this major trend line. If I were to redraw this line ever so slightly, you could bring it up, put it right on it, and that would still make slight sense. So I'm actually going to give it that, but this orange line that I have coming up, if we go below this, I would say 807. If we go below 807, we're in a lot of trouble, game, but we do have support at 106, so 105 or lower. Ouch to the markets. In the Dow here, we had this rising wedge. It broke down. We're at low base, finding support the 100-day moving average. If we get a close below that, watch out for the markets. And let's go over here to the weekly charts. These actually hold more weight than daily charts. Now, see this big chunky major trend line? We busted over that back here in August. We did this high base, but the high base has failed. So for the week, this is bad news. Again, we've been talking about this. We are now below a major trend line, and we close below the 20-week moving average also. The only hope that we have is this 13.093 area that can act as support. The question is, will it? Next area of support will be this trend line, then the 50-week moving average, and then a major trend line. So we're in a lot of trouble. There's a major crack in the ice right now. That's on the Dow. The S&P, I know I got a lot of lines here, but rising wedge. You can see this rising wedge. We're just pulling back, finding support at the 20-week moving average. Question is, will that will this hold? If you look here, we have a bearish divergence on the MACD centered oscillator with this rising wedge. So the markets are in trouble. They're in trouble. Let's go here to the NASDAQ. NASDAQ here, big bearish divergence on the MACD. Rising wedge, but check this out. We tried to get above a major trend line, this big blue one. We failed. We've pulled back. We're below the 20-week moving average. We are at a support line. Support. We're at a main support line right now. The question is, will it hold and can we bounce? With this big bearish divergence, it looks like it could break through, but we are pretty extended. Wouldn't surprise me to see a little bounce here and then a drop. Let's take a look here at the Russells. And the Russells, we smack the major trend line, we come right back down, finding support at the main trend line, and we bounce back up, finding support at the 20-day or 20-week moving average, and it's a rising 20-week moving average. This looks like an opportunity for a buy possibility. It might be short-lived because this is a big, nasty rising wedge with a bearish divergence also. But this is a very typical bull pullback to support level. So if the markets do rally, small cap stocks could be grand. So let's also take a look at the monthly chart here. The monthly chart, we popped up, we're pulling back, we're at a trend line now. Support or resistance? Resistance, we're at that support line. The question is, can we hold or will it start to break down? If this breaks down, gang, whoo, it's going to be a nasty fall. We could be at 750 before you know it. As far as the NASDAQ's concerned, the monthly looks gnarly. It looks like we are building a double top M4 murder type formation. We do have a bearish engulfing pattern, and it looks like we're heading southbound as far as the techs are concerned. The S&P, maybe we were talking about this apex in the rising wedge. Well, we are starting to break down below it right now. That is problematic for the markets on the monthly chart on the S&P 500. This could be a significant drop to the downside. As far as the Dow is concerned, exact same thing, but check this out. If I zoom in, we are now below a major monthly trend line. We are below that right now. We are in significant trouble. I see there being a likely chance of dropping down below 13,000 on the Dow. And you're hearing it first here, and I'm calling this way beforehand. When you get really good at these technical analysis and these charts, and you've been watching me. Oh, and by the way, gang, I put out a request, a question on how long you guys have been following us here at Grok Trade and my videos. I am flabbergasted. I am shocked and utterly humbled by how long some of you have been watching my videos. A lot of you guys go back to my D7 days, which was my alias with Matador. And wow, some awesome. That warmed my heart. So, real quick, down there below on the comments on Facebook or on YouTube or on our website, wherever you are listening, or if somebody shared this video with one of you guys over in Elite Trade or Scott Trade or any of the other forums out there, down there in the comments say how long you've been watching the videos. And extra bonus points for anybody that puts in where you've shared our videos. If you shared us someplace, let me know. I really would like to hear that. But check this out. We are in significant trouble. We could be dropping here. Now, let's take a look at the banks. This is the monthly on the banks. We have a tweezer top, but a lot of support below us on the weekly chart on the banks. Now, watch this. We are in a rising wedge. We do have a doji. This is a perfect bull pullback and ready for a rally, but we have a bearish divergence on the MACD. This is, will we break down? If so, it will be a nasty breakdown, or we're going to see a few weeks bullish before it rolls over. But we are in a lot of trouble, gang. On the daily, we are in a major support line right now. We can't get off of it. That is bad news. The 50-week move or 50-day moving average is acting as resistance, and the 20 is dropping quickly. The VIX has popped up. We're building a nice little pullback here right at the 200-day moving average, but look at the weekly, gang. The weekly, we had this trend line. We are now over at trend line. On the VIX volatility index, this is the fear indicator, and it has broken resistance. Ouch. Let's go over here to gold. This is the weekly chart. Man, this looks good, doesn't it? We had this symmetrical triangle. Boom, breakout. We dojied out. We're pulling back, bull pullback to the 38.2% Fibonacci retracement. Look for buying opportunities. If you look at the daily, you have a nice bull flag. This thing looks like it's ready to rock and roll. Look at the MACD down here crossing over, now heading northbound. Same thing goes for silver. Let's go to the weekly chart, blow this up a little bit. Falling wedge, breakout, bull pullback, doji on the weekly. Nice. We're above the zero line on the MACD. And if it curls up, that will be a pop. Look for a long-term hold on silver and gold if we get confirmation bounces on all of those. So not too shabby. Let's take a look here at Apple. Apple for the weekly is just crashing and burning. Remember the rising wedge we've been talking about? You know, death below the 20 simple moving average on the weekly, and we are there. But we're so overextended here. We might get that kiss of death. Kiss of death would be a rally, touch that line, which was acting as support, acting now as resistance, and then it crashes. That would give us what's called a head and shoulder trend reversal on Apple. But the fundamentals are quite strong, so you don't want to write that off. Nice little hammer down here. It's so beat down. It wouldn't surprise me to get a rally here fairly soon on Apple. Google here. Let's take a look at Google. Low base formation on the daily. That is a bearish formation. Be really careful with that. I don't like that huge drop off that we received just last week. So anyway, we are slowing down this descent. I don't know if it's a buy opportunity yet. Facebook on the weekly looking strong, big pop up, and right here on the daily we gapped up in a little bull pullback, looking for an entry opportunity here. A lot of you guys are playing this because I've been spotlighting it, and you guys are making some great money. I also spotlighted several weeks ago Q Core, and down here now it's at 26. I mean, it's a lot of stocks out here doing fairly well. So share us with a friend. Thank you for being a part. Take care. Very safe trading to you. And if you haven't done so yet, go through the 201 home study courses. The 201 home study courses will give our 6 courses, 28 lessons. It will take you 6.5 hours to go through to complete them all. It's me sharing my tricks, tips, and secrets in trading, and it will do you a world of good. And you really need to take those before you even think about going through mentoring. Take care. Safe trading to you.
This may not be you, but traders who come to Grok Trade for help are sharp, well-educated, and have made money in the past. However, they weren't executing consistently nor disciplined in managing risk. They bought high and sold low. They let small losses turn into large losses. they kept losing money. This does not have to be you. They made a change before it was too late. Grok Trade students trade within the live markets with confidence. Get signed up today before it's too late for your trading.